Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomats. Guys, we are experimenting with some different equipment here to help make some of the quality better on some of the videos. So let us know what you think. We'd love your feedback here. Are the pictures more clear? How is the audio sounding? Let us know down there. But we didn't have you come today to tell us about the upgrades here on the equipment. We came to talk to you about a very potentially undervalued dividend growth stock. This company earned over 122 billion in revenue last year. This company is number 29 on the Fortune 500 list. And oh yeah, on top of it, Lanny, they also pay an over 3% dividend yield. We can't wait to talk to you about this dividend stock today.
You're like, I'm looking and I'm liking, guys, but smash that subscribe button. Give us a nice thumbs up. Yes, I got the blurred background right now. Different seat, different setting. We'll get that cleared up hopefully within the next few weeks here, guys. But as Bert indicated, a stock here that's 150 billion in market cap with the yield above 3%, generating billions of dollars in revenue here. But the stock's down this year, Bert, 10%. Stock's down actually in the last year by 16%. In fact, this stock has been lagging almost every indices over the last 5 years. So what's going on with this stock, man?
Yeah, but I should say it's probably one of the best performing in its sector, oddly, especially when you compare it against the other two. Who are we talking about today, Anthony?
Here's a nice piece of, no,
Yeah, it's a little
guys.
bit less shitty than the other pieces of you know what.
Yeah, Bert said the word shitty and then blinked it out in the next part of his sentence there.
Hey, new equipment, new diplomats. That's the motto here.
But Bert's saying, yeah, number 29 on the Fortune 500 companies here. Is this a stock to buy right now? And you guys probably have been looking at this stock, may even own this stock, but we are talking about Comcast, ticker symbol CMCSA. Very interesting. We don't really showcase this stock here on our
No.
channel too often.
No, and that's what really jumped out to me. And Comcast is a very, very interesting because we obviously joke around about how much we hate Paramount. We joke around about how much we hate Warner Brothers. There are stocks that we love to hate. So you're asking yourself, why are we sitting here talking about Comcast? Well, they just released earnings, but they do have some things that differentiate them from the other companies. And I think that's what's really important to highlight. They obviously have the content, right? They just have the Olympics, the biggest event in
They've
the
got the NBA theme song when you have, NBA on NBC.
Yes, that's right. I would hope they don't have the NBA on TNT. Everyone knows it. Yeah, they got the NFL. They got all the sports. They have the Olympics here on the NBC. They have the Peacock streaming. They have the news networks. They have Bravo, E. They have a little bit of flavor for
They've got the
everybody.
Dividend Diplomats.
Maybe Comcast, you can sponsor us if you want. But they also have the theme parks too, and that's what makes them unique, especially compared to Paramount there, where it makes them focus a little bit on comparable to Disney. They have the Universal theme parks. They have the Orlando resorts. They have it in Hollywood, Japan, Beijing, everywhere. But Lanny,
Akron.
Akron, AK Rowdy, but they don't just have content. It's not just content. They also have internet. They have Xfinity. They have Comcast for Business. They have Sky. They have a little bit of everything. Sky Media here. They have so much. This is such a massive company. They cover it all.
But they are losing a big piece coming soon.
Hmm? Hmm?
WWE.
The biggest content drip of them all. They lost that one out. So we're talking massive company here. Again, last year they had 120
Huge.
billion in revenue. We're talking Comcast. They just released earnings too, Lanny. You want to cover some of those metrics here and some of the earnings per share numbers?
Yeah, they earned $1.21 in adjusted earnings per share. Hate that adjusted number, guys. A non-GAAP measure for all you accounting buffs out there. You got two of them here, especially Bert's chugging that Pilsner right there. Um, you know, but the revenue fell to about 30 billion for the not too bad, obviously, still generating 30 billion of revenue. Content and experiences surprisingly also fell, similar to like Disney with their experiences, aka theme parks, fell to about 10 billion for the quarter. Again, it's all about theme park revenue dropping over 10% actually in that specific category. So they beat analyst expectations on that adjusted earnings per share. Again, when you hear the word adjusted, just think they're throwing all these one-time add backs that they shouldn't expect on a go-forward basis. But again, you know, not a true earnings per share figure here. But free cash flow, still came in at over 1 billion, but that was also down pretty significantly, right, Bert?
Yep. So the numbers, not bad. Beat some, lost on the other. The question is, what about the subscribers? What about the people that are going to drive future revenue growth? What is going on for Comcast? They're losing some broadband subscribers. They lost 120,000 broadband subscribers during the quarter, even though, interestingly, domestic broadband revenue was up 3%. So they lost subscribers, grew revenue. Price is getting jacked up, baby. Then overall, too, they added some domestic wireless people. They added while losing some video customers. Overall, mixed results. Losing broadband, gaining on the domestic wireless, and losing on those video customers.
As I bang the crap out of my knee on this desk here, guys, as I try to get used to this seating position. Yeah. I mean, subscribers obviously down, trying to make it up for higher cost per customer there.
Peacock did great, though. They did
Yeah,
great.
it seems like the focus on all players, correct me if I'm wrong, has been on the streaming here.
Mhm.
You had Disney report profitability in that segment of Disney Plus. You had Paramount even say, hey, we have operating profits here on our streaming of Paramount Plus or Max or whatever, or no, Max is with Warner Brothers. Who these damn streamers? So you got people actually coming into profitability. So Peacock not profitable yet, but the adjusted loss is only 348 million.
Yes, I very much agree. So we're going to run them through our screener. We're going to put the metrics up here. We'll go through them quickly. Talk about the PE ratio, payout ratio, dividend history, and that bonus metric, the dividend yield. They closed Thursday, August 15th, 39.52, just over 419, about 420 here of earnings. That gives you a payout ratio below 10. It's 9.43.
Yeah, I mean, under 10, obviously pretty consistent with this industry. So, good value, but I would say it's all relative. So just always keep that in mind. On the payout ratio, though, again, paying $1.24 per share per year, payout ratio is below 30%. So unlike some of the others with higher payout ratios, this one appears to be relatively safe, but if free cash flow continues to decline, this is one area to correct that.
Yes, and you need the low payout ratio because you need to be able to invest in content. You need to be able to invest in towers for their broadband wireless. They're in very capital intensive sector, so you can't afford to juice up that dividend. Their 5-year
Right.
dividend growth rate is 8.45%. They've increased that divvy for 8 years.
It's all about that divvy. Dividend yield, as Bert said, 3.14%. Again, stock is down. So, Bert, we've owned AT&T, we've owned Warner Brothers Discovery, we've owned Paramount. What is your take on Comcast? Is this a stock to buy right now? Do you want to hold this stock in your stock portfolio?
I don't know. It's a tough one. This one's hard because it's like you keep going back to the sector that's continued to burn you over time. It's like they're a combination of them all, right? They're a combination of AT&T and T and Verizon. They're a combination of Disney Plus. They have NBC, one of the best networks out there. One of the best. They have the theme parks. They have some of the best IP to go along with it. Got the
Yeah,
wireless. So they've got like
IP.
they've got a lot, but the question is it too much? And I think like
Who owns DC?
I don't know. My girls aren't quite in that age yet. We haven't gotten into the superheroes yet. Isn't that
Batman and
Yeah, they're not quite there yet.
Superman.
Spider-Man is the one. And that's even
That's
great.
Marvel. That's Disney. Oh, so
Yeah.
Warner Brothers Discovery owns DC.
Yeah. So do they have the great IP? No. Do they have the stream? They lost WWE to your point. So it's there. It also makes me nervous.
You know, is Disney your best play here, or is Comcast? You know what I mean?
Yeah, and the question is, we've heard those rumors, should Comcast buy Warner Brothers and just beef up their content? So it's like what's
Should one
holding
piece of
me,
buy another piece of?
yeah, what's
I'm
holding
just
me
kidding.
back is kind of some of the stuff that we saw when we ran into AT&T. AT&T years ago, that was it too much, too big? Is it going to be too much to manage? And I think that's why I'm shying away from Comcast right now, even though the metrics are looking okay.
Sorry guys, looking at this camera, that's a new camera, guys. It's a 4K camera, so it's just kind of odd because it's like, wait, which way am I actually tilted here? Um, but for me, I'm staying away from the industry. Um, just staying away right now, even though Comcast has great metrics. My appetite for entertainment and media after being stung, spit on, shit on, I think I'm just taking a break.
Yeah, so everyone, let us know what your thoughts about Comcast are. Obviously, we're both staying away right now. We're still not sure what to do with this sector, but if you have a reason why you think we should be considering Comcast, please let us know in that comment section below.
Guys, like this video, subscribe to this channel. It's all about talking about individual dividend stocks, dividend income, dividend portfolios, kind of how to help each other get to that financial freedom. And Bert, you got one last comment here.
You're either with us or you're against us, Jack.
That was Bert the Hurt and Laney from the Dividend Diplomats. Over and out.